How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, taking a look at the three major indexes that comprise the United States stock market, as well as going over a bunch of stocks and ETFs that I'm personally watching and looking to trade right now, heading into the month of March in 2020. And I also want to let you guys know what I did in the markets today. Did I buy any stocks? Did I sell any stocks? And I want to let you in on my thoughts regarding the overall markets and whether or not I see further downside in the markets, because you saw today, and you can see today's session live on my screen right now. The markets are very, very red. The S&P's down about 100 points right now. The Dow down about 900 points. And the Nasdaq down 330 points. So a lot to talk about in today's video, guys. But before we do, all I ask from you, as always, is if you enjoy the video, find value in it, simply go down below for me, hit that like button, and also consider subscribing to the channel if you want to see further content like this. And if you haven't claimed your 2 free stocks valued up to $1,400 from Webull, that link is down below in the description box. All you have to do is deposit $100 and you'll get those 2 free stocks. So without further ado, let's just dive right into it and talk about what is going down right now, guys, because again, the markets are getting slammed with about an hour, 30 minutes left in today's session. And yes, I know I am filming this a bit early today. Can't film it towards the close of the market, but either way, it's bad, guys. The market right now, the S&P that is down 100 points, down 3% on the dot. Take a look at that. And this is one of those days where panic selling is for sure kicking in. Not really throughout the day in terms of, where we opened to where we are now, but really overnight is where this massive cliff dive of a dump came from. We can see on Friday, the S&P closed at 33.35 and it opened at around 32.55, guys. So that is an 80-point drop from the close Friday into the open today. And many of us know, and really if you guys watched my video yesterday and if you were paying attention to the futures markets yesterday, you knew that this was potentially in store because we saw the massive dump down in the futures market yesterday, which a lot of the time can foreshadow what might happen in the upcoming trading session, which is today. And we can clearly see that yesterday's session kind of did forecast or foreshadow this massive drop-off. So overall, 100 points in the red, down 3% on the S&P 500, and it seems like we are trying to hold this 4-hour support here on the 180 SMA, right, on the 4-hour chart. And if we zoom out a bit, let me show you some key technical levels where, the S&P could end up selling off to if we do see more fear pumped into the stock market and we do get some more selling pressure, right? Take a look. Even though we are selling off aggressively today, the past couple of days have been sell-offs for the S&P, we're still more towards the top of this all-time high, right? That's very, very clear. So in my humble opinion, yeah, there could be some more selling off in store here, to the lowest point I'd say being maybe 30, maybe $3,030. And why am I saying that level? Well, on this 3-year, 1-week chart on the S&P, that level is right above that 50 SMA, as well as that old all-time high, roughly at $3,000. So for me, selling off from 3,400 down to about $3,000 on the S&P, that's much more than a teeny pull down, guys. That's about a 10% drop off, which is extremely healthy over the course of years, a couple years, guys. The market's pulling back 10-20% multiple times throughout that course of 5-6 years, let's say, for example. That's extremely healthy. So that would be a very nice opportunity, let's say, if maybe you're not in any long-term investments, or you're not in the stock market yet, that could be an opportunity to get in. And even right now could be a good opportunity to get in. But of course, always do your own research, do your own due diligence, and understand the risk and reward involved before buying anything or selling anything at that matter, right? So the S&P, take a look at those individual levels. Now, going over to the Nasdaq, guys, the Nasdaq here is down 3.5%, so even more than the S&P 500, and that is because the tech names out there, Microsoft, Facebook, Google, Netflix, Amazon, they're getting crushed today. It's absolutely crazy how much these stocks are getting crushed. And we'll go over those in a couple of minutes, but to look mostly at the Nasdaq here, going to, let's say, this 4-hour chart, we're way below that 50 SMA clearly, guys. We're way below that 180 SMA clearly now on the 4-hour chart. So at this point, we're going to be approaching that $9,000 level of support. This is very important, at least on this time frame chart here, because a couple months ago, back in, actually not even a couple months ago, 1 month ago, back in January, that's kind of where we double bottomed and broke out for the Nasdaq. So for me, I'd need to see it hold this level, 9,000, 9,100. If we were to break that, that could bring some more selling pressure into the Nasdaq, especially if the markets in general are experiencing more fear around the CV and the whole global outbreak and the effect of businesses in general due to the CV. I could see this thing falling even further. If we go to this 20-day, 1-hour chart, we can see again that $9,000 level of support, and really, we're not showing any signs of a recovery here, a rebound quite yet, because the EMA is still acting as a resistance, right? The 50 and the 180 SMA on the hourly chart are acting as a resistance. So at this point, technically speaking, we have to treat the NASDAQ as, there could be more selling pressure here. It could continue to fall down here over the next couple of days until we get a sudden pop or some sort of a pattern where we're seeing some, bullish momentum, at least in the short term, right? So let's go over to the Dow, because this is probably, if we're looking at, numbers here, the most interesting, because this, although it's not as far down as the Nasdaq, not as it's kind of in the middle, right? It's down 3.2% here. It's doing worse than the S&P, but not worse than the Nasdaq. So it's kind of in the middle there in terms of performance. But the key thing here, guys, is we hit a $1,000 red day in the Dow Jones today, which is pretty crazy. So a couple of levels that I'm definitely watching here on the Dow Jones are going to be 28,000. Well, that's really just the main level that I'm going to be watching here for support, due to that being an old resistance from back in the month of November. And in general, it seems like we've held 28,000, 28,100 multiple times in the past. So for me, if we end up breaking this level, that could lead to a lot more selling and maybe a gap fill down to, let's say, $27,300, maybe $27,400, which would be another 600 points to the downside here if we're just looking at the Dow Jones. So obviously, guys, there are a lot of fears right now in the stock market surrounding the CV and the Q1 global, or the Q1 earnings impact that it's going to have on a lot of these massive companies. We've seen Apple come out, what was that, like last week or 2 weeks ago, Apple came out and said that they're going to be affected Q1, like we didn't already know that, but it seems like ever since then, a lot of these tech names have been hurt. A lot of the market in general has been hurt, and the media has been pushing a lot of fear, in my opinion, as well, that has really just scared the crap out of investors, especially, intermediate, not even intermediate, but beginner people out there that aren't too in tune with the tactics of the media. Not saying that they're using tactics on us, but they don't understand how the whole big picture kind of works, right? And just to do a quick update on the CV in Italy right now, that's kind of where things are exploding. There's a quarantine area right now in Italy since Sunday where roughly 50,000 people are being held there. And as of now, there are around 26 casualties globally when we're looking at the CV, with South Korea also experiencing a pretty big surge in cases. Right now, 231 new cases as of today, with total here in terms of South Korea being around 830. And in terms of the United States, there are 53 cases of infected people. So not going to go too in depth on the CV right now and everything around that, but just understand that is kind of really the main driver in the stock market to the downside. So let me know in the comments, guys, what are your thoughts around the markets now? Are you buying this dip? Are you sitting in cash? Are you selling out of your stocks, which I think is one of the dumbest things to do, right? Because honestly, a lot of the time, this stuff could be short-term. Not saying that this is going to be short-term, but a lot of the time, people panic. They sell whenever there's something like this going on, whether it's revolving the CV, the trade war, whatever, right? People panic. They sell out. They take a loss. And then all of a sudden, a couple weeks later, the market rebounds, and then their investment would have came back to its original price, or they would have even made money. And in terms of that, it would have been a better idea for them to just hold it, right? So let me know, what are your thoughts down below in the comment section. Now, for me, what did I do today, guys? The truth is, I didn't really do anything except buy a pretty nice amount of Microsoft here in the pre-market session. And Microsoft, and you guys read in the title, Microsoft, AMD, Tesla, we'll talk all about those, but Microsoft is one that I'm focusing on heavily here, right? And like I've mentioned in many videos, and I put my money where my mouth is, guys, right? I don't just spew this stuff for fun. I've mentioned this before, that if Microsoft were to get to 170 and even in the 160s, I'm looking to buy this stock and hold it as a swing trade. I literally mentioned that when Microsoft was in the 190s. And back then, I was thinking to myself, there's really no way we're getting back to the 160s. And voila, we're back to the 160s. And again, I'm a man of my word. I ended up buying Microsoft this morning in the high 160s. We can see it actually fell all the way down to about 160, what was that? 163, which looking at it now, that would have been a phenomenal entry point. But the truth is, I picked it up pre-market at around $168 per share, right? I picked it up here, pretty sizable amount, right? Because I've been averaging in since the low 180s. And I kind of want to build or bring my average cost closer to the low 170s. So the way you do that is you buy heavier when it's in the low 170s, right? So the fact that I bought more at this point, right, 168, 169, right around here, that brought my average cost down now from around 179 roughly, which it was on Friday, down to about, let's say, what is it now, like 176, maybe 175-ish. So I'm getting to the point where I'm almost fully built out in terms of my Microsoft position. Now, what would lead me to add more to it is if we were to fall, let's say, into the low 160s again, maybe 160, maybe even, I don't know if we'll get there, but anything could happen at this point. But in the high 150s, that's where I'd probably add the last of it. And the truth is, this is not one that I'm looking to continue averaging down, averaging down, averaging down. There is going to be a point where I'm just going to cut it, not cut losses, but cut adding new money to it and just hold what I have built. And for me, the average cost I'd feel comfortable with, again, right now I'm at 175, but I'd feel comfortable with anything in the low 170 range and even in the high 160s, right? That's something I'd feel comfortable with because overall, I think Microsoft will recover back into the 180s and 190s, and when/if that happens, that's where I'm going to make a really nice amount of profit. And it takes patience, guys. This is not going to happen, at least in my opinion, with my plan here, in the next 1 to 2 weeks. This most likely will take 1 month at least to pan out. But again, I'm willing to wait. I'm willing to swing trade it for a month, and that's kind of what I'm doing here in terms of my Microsoft position. So overall, that's really the main stock that I'm involved with. You guys saw I sold out Uber on Friday. I'm thankful that I did that because if I weren't to sell out, I'd be red on this position right now. And for Uber, guys, and in general, not even for Uber, but in general, having cash is a way to hedge against the market, because think about it. If you have cash, sure, you're not making money on your cash unless you're in a high yield savings account, but you're not losing anything. So in reality, your return on cash is 0%. But let's say you were invested in a swing trade here like Uber, you would have lost 6% today. So having cash is actually better than having a red swing trade. And that's obvious to a lot of people, but others, like beginners out there that force things and they always want to be involved with the market, it's sometimes good to understand that being in cash sometimes is just better. Just waiting for the opportunities, holding cash is better. And that's kind of what I'm doing now. And I want to go over here a bunch of stocks and ETFs that I'm watching. And Uber is one of those. Ticker symbol UBER. Might as well talk about that since we are on the screen, or rather since it is on the screen right here. So today, Uber down 6.5% as of right now with about an hour and 13 minutes left in the trading session. And one level that I was hoping it was going to hold is $38. It was holding it earlier in the session today, but as of now, it seems like we might push below $38. And anything below 38, especially if it closes below 38, I could see it filling the gap down to, let's say, $36.50 to about $37, because the close below 38, that would be a bearish close in my opinion. So I'd consider heavily picking up Uber shares in the 36 level, $36.50, maybe $37. And this is the beauty of swing trading, guys, because again, I traded this one a lot over the past couple of months, just locked in profits on Friday. Now I'm looking to re-enter at a cheaper price. So this is great. This is the beauty of swing trading. Another one is AMD, guys. AMD got absolutely squashed today. We talked about how if it were to hold 52 yesterday in yesterday's video, that would be good. But if we were to break 52, watch for the fill down to about $47. And I didn't think it would happen in one day, but it did. It filled all the way down to $47. And you guys can see now it's consolidating. It's trading roughly at around $49 to about $50 right now. So on this dip, we have a nice 16 to about 17% of potential profit opened on this $10 per share drop in AMD, which in my opinion is very, very attractive. So I'm for sure watching AMD heading into tomorrow's session. And the other one is going to be Tesla, guys. You saw that one in the video. And in yesterday's video, believe it or not, I said Tesla, I'd consider it if it were to pull down to that 50 SMA and see some sort of dip of around 60, 70, maybe even $80. And that's exactly what we ended up getting today, believe it or not, right? It's down about 7% right now, and you guys can see we are seeing a bit of consolidation at around $830, which again puts us on top of that 50 SMA here on this 4-hour chart. So could Tesla be a dip buy? I think it definitely could be, but one thing that worries me, again, with a lot of stocks, pretty much every stock out there, is if the markets continue to push down, odds are a lot of these stocks will follow suit. So that is one thing that, again, you just have to be aware of. Have that cash on hand to kind of hedge against the market going down. And when you see that opportunity, strike. Because for me, if we hold 830 and maybe pop into 850 tomorrow, 860, that could be an opportunity for Tesla where I'd strike. But let's say we were to break that 50 SMA, maybe start to fill the gap back down to the 700s. At that point, I'd be honest, guys, I'd be worried to get into Tesla. So those are really the four main stocks that I'm watching right now: Microsoft, Uber, Tesla, and AMD. And just to go over a bunch of others, because again, today was just absolutely brutal. Facebook back into the 190s today. Overall, it's holding $200, which is solid due to that being really an old resistance from months ago and from recently. And just generally, 200 is the area I'd hope for Facebook to hold. And from there, I could see some potential, guys, but as of now, I'm not jumping on this opportunity quite yet. I rather give it some wiggle room. Google down 4% today, down about $60 per share, and this is one that I might consider picking up on the dip. We have to wait and see what ends up happening. Apple down $11 today, down 3.7%. Amazon down $82, down 4% today. So you guys can see, tech got slaughtered. Netflix down $10, down 2.5%. Airline stocks today as well, they got absolutely cremated, down almost 6% for Delta Airlines. If we take a look at Spirit Airlines, this one got hit 10% last time I checked, down about 8.2% right now. What are some other ones here for airlines? American Airlines, what's their ticker symbol? I kind of forget, to be honest. I think it's AAL, isn't it? American Airlines. No, it is not. Yes, it is. AAL, this one's down 8.34%. So keep an eye on these airline stocks. Another one, CCL, Carnival Cruise Lines, they're down 7.83%, down $3.26. Square is one to also keep an eye out for, as they are reporting earnings here on the 26th, which is actually on Wednesday, 2 days from when I'm recording this video. Square hit a high of $87, now trending back to around $78, $79, which is a support level from the past couple of weeks, so definitely worth watching in my opinion. Space stock, which, wow, take a look at that, guys. Out of all of the red stocks out there, Space, ticker symbol SPCE, this one's actually turning green right now. It was red earlier, but now it's up 3.4%. Would you take a look at that? Wow, $29 this morning, all the way up to about $35 per share now. This could be around some hype due to their earnings actually coming out tomorrow, I believe. So this is definitely one worth watching due to the earnings call. If they have anything positive, involving the business model, this could be really what takes Space to maybe $40 again, maybe $45 per share. For sure, watching ticker symbol SPCE. So let's take a look at gold very quickly, /GC, as it's been very, very hot over these past couple of trading days. As again, like I've mentioned, there's been fear, a lot of volatility in the market, and just a lot of just people panicking, right? A lot of people have been flooding into gold, and you can see today it's up $9.30 right now, up 0.55%. And the interesting thing is we actually peaked at about 1690 overnight. This was actually at 4:30 a.m. Eastern Standard Time on the 24th of February. And from there, we've been declining in price, and we're actually dumping even further right now, which is pretty interesting. I wonder, it's funny how things work sometimes, right? As the markets are down, they were down all day today. You'd think gold would be going up all day as well, but it's been going down all day, believe it or not. We gapped up again aggressively, and since the market opened, this thing's been going down, and it took a cliff dive back at 2 p.m. Eastern Standard. So, again, it's funky how things work sometimes, but in general, gold will be up when the market, again, is going down, when people are fearful, as people are putting their money to hedge against the economy using gold, right? That's kind of how it works. And JNUG is one that's for sure one that I'm watching that trades based upon gold, and this is one that is red today. That's the funny thing again, right? It gapped up to 107 this morning. It's pulling down now to about $91. So this could be setting up for maybe an entry point tomorrow if we do see a further sell-off, because again, if gold goes up, JNUG goes up, which is a 3x leveraged ETF that trades based upon GDX, which is really just an ETF that tracks gold. So these are all correlated at the end of the day, and I'm watching just gold in general and these ETFs that trade based upon it, right? And TVIX is another one that I wouldn't recommend this to a beginner. It's very volatile, very risky, but you can make money if there is volatility and if the market is red. So if you want to hedge against some of your swing positions, like for me, I'm holding Microsoft now, right? I'm a little red on Microsoft. So let's say I wanted to hedge against that. I could have traded TVIX today, made 5-10%, whatever on my position, since it is up 30%. If I grabbed a little bit of that profit, that could have been a hedge against that drop in Microsoft. I didn't do that, but it could be an option if I see potential in it, right? And since most of the move came overnight, I never really got into it today, right? I could have got in at $56, rode that, but the truth is, I didn't, right? I didn't. So TVIX for sure is worth watching here. SQQQQ, 3 Qs. I don't know if I said 4 Qs, but S with 3 Qs. This is an ETF that tracks the Nasdaq. It goes up whenever the Nasdaq is selling off. So this could be a way to play the downside in the market via the Nasdaq. And one via the S&P 500 is SPXS. It goes up 3 times whatever the S&P is going down. So overall, guys, that's pretty much it for the market. A bunch of stocks that I'm watching and kind of my thoughts on whether there's further downside here. I really think there could be, but a way to hedge against that is having cash. Maybe put a little bit of money in gold, not too much, at least in my opinion. I'm not a financial advisor, guys. Don't just base your opinion on me or anybody else out there, but I would think it's a decent idea to have maybe 2, 3, 4% in gold, have some cash now ready for opportunities, and that's kind of how I'm approaching it. So let me know down below in the comments, what are your thoughts? If you guys enjoyed this video, hit that like button, consider subscribing, and don't forget to claim your 2 free stocks valued up to $1,400 with a deposit of $100 into Webull. That is linked down below in the description box, as well as our free Facebook group and our free Discord group chat. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.